Alright, today we would be exploring technical analysis using price action. Okay, we would be exploring technical analysis using price action. Alright, are we good? Fantastic. If you are following, let me know in the chat box. If you are following, let me know in the chat box. Alright, so today, we're looking at technical analysis using price action, and my name remains Tunmise Olaoluwa. Now, a quick one here is leverage trading involves risk, so it's important that you trade responsibly. All right, it's important you trade responsibly. There are also regional restrictions, in our terms and conditions. So please do well to check our terms and conditions. Do know that this session is strictly for educational purpose only. It's not a financial advice, and past performance is not indicative of future results. So here is a quick about me. I've been a trader for the past 7 years with a solid background in finance and quantitative research. So I trade Euro USD, GBP USD, and USD JPY. So today, here is our agenda. We'll be having a deep dive into discussing the use of top to bottom strategy. We're going to review the Euro USD currency pair, review price action of Euro USD, review any currency suggested by the audience. So here is a quick organizational issues, right? This session is going to last for 45 minutes, and please do well to use the YouTube live chat to ask your questions during the webinar. I'm periodically going through the live chat, to see if there are any questions, and I answer them. Okay? Now, our strategy is going to more like consist of analyzing historical price movement, utilizing candlestick formation, chart patterns, and market structure. Now, what kind of trader is it suitable for? This is suitable for position traders, intraday traders, and swing traders. Now, it's best and can be used during high liquidity periods, time frame from 1 hour to 1 month time frame. So that's the period that this can be used. Now let's go to our live chat. Okay, so here is our live chat. So we want to start with Euro USD. Let's take this off. Now we can see Euro USD. We're going to start at the daily time frame. Now this is the chart of Euro USD on the daily time frame. Now, when you are analyzing the market, you are asking yourself question about what the market has done, what the market is doing, and what the market is going to do. All right. So let's do this. We're gonna say I want you guys to note this, right? So we are looking at what the market has done, what the market is doing, what the market will do. What the market has done, what the market is doing, okay, and what the market will do. So these are, okay, good. Now these are the three questions that we are going to be looking at whenever we want to analyze the market, because we are literally focusing on what has happened. Okay, let me add to it again. I need you to understand this clearly. So we're looking at what has happened, what has happened, okay, what has happened, which is the past, what is happening, the present, what will happen, the future. What has happened, what is happening, and what will happen. All right, so now these are the things that we are going to be looking at. So this just further buttress this earlier point here, right? So in the above here, we said we look at what the market has done, what the market is doing, and what the market will do. On the other hand, it's almost similar to looking at what has happened in the past, what is happening in the present, what will happen in the future. Okay, good. So when we look at these three focus areas, we are able to now come up with a logical, you know, a logical conclusion as to where price would most likely go. Okay, so I don't want to take this away. Maybe someone can write it down for us and just keep it. Someone should just write it down for us. Okay, I'm going to ask you along the way, right? So I'm going to take this off. Guys, write this down. Okay, good. Now let's look at the market. This is the daily time frame. Okay, now we are at a point where we want to analyze, we want to answer the question, what has happened? So what has happened, we are going to map the market structure. Okay, we're going to map the market structure. Okay, good. So here we have levels of support and resistance that must be paid attention to. Levels of support and resistance that must be paid attention to. So if you look at it now, this is the current one where price currently is seated. You can see how price is seated on this tiny red line. Okay, you can see this tiny red line shows where price is. Okay, now you can see that historically we've seen that price had gotten even above and further above this level, right? So if we are targeting this level as the level where price would most likely get to and reverse back, of course that's like a good lead. So if you do like this now, you see that good. So that despite the fact that it looks like this price has broken out of this resistance zone and has gone up as high as this, there is still a higher chance that price will go higher from here, because historically there are footprint above the current market price. There are price footprints above the current market price. So this footprint here now, which means that the last time price got to this level of 1.23055 is in 2020-2021. Between 2020 and 2021 was the last time price got to this region, and now we can see price already at this level. When you are looking at what direction or potential level would price most likely go and touch, there's a higher chance that price would come and touch this level where there have been price footprints in the past. So prior to now, there have been price footprints at this level. Okay, good. Are you following, guys? Are you following? Okay, so because what we are looking at now is what has happened. Now we are answering the question what has happened in the past in order for us to compare it with what is happening and be able to make an informed judgment on what will happen. So what has happened is the fact that currently price is trading at 1.194 90. Okay, however, what has happened is that price has gone above that level historically in 2020-2021 and has gone far above that level to 1.23055. So which means now there is a likelihood that the future wants to repeat itself. I'm sure you must have heard of the saying that history repeats itself. Okay, while it is known that history repeats itself, so let me write it out here. So some persons will say history repeats itself. All right, it's a popular saying, quote, right, amongst traders that would say, oh, history repeats itself. However, while that is true to some extent, history does not repeat itself if humans does not repeat history. So I always like to say that humans repeat history. Humans repeat history. Okay? Humans repeat history. How many of you believe that? Which one do you believe? Let me know in the chat box. Is it that history repeats itself or humans repeat history? Do you believe history repeats itself or humans repeat history? Let me know in the chat box. I'm waiting, guys. Let me know in the chat box. Is it that history repeats itself or humans repeat history? Does history repeat itself or humans repeat history? Let me know in the chat box, guys. Let me know in the chat box. I'm waiting. I want to hear from Lucy. I want to hear from Envy Creative. I want to hear from Anil. I want to hear from, Power. I want to hear from Hussein. Does history repeat itself or humans repeat history? Let me know in the chat, guys. Let me know in the chat. Does history repeat itself or does humans repeat history? Let me know in the chat box. Humans repeat history. I can see Hussein says human repeat history. Mohammed from Pakistan, let us know, does history repeat itself or does human repeat history? Okay? Does history repeat itself or does human repeat history? I'm waiting. Only Hussein has answered me. All right. So I believe that humans repeat history. Okay? So when we look into this part now, let's zoom out into this. This is an historical price that is almost similar to what we are currently experiencing in our current trade. But long time ago, there was a price footprint where price consolidated at the 1.1802 price level and a breakout happened, a pullback occurred, and price went ahead to touch the 1.23055 price level. Now, is humans trying to repeat history now that we are in 2026? Look at it. Look at how price consolidated here, right? And a breakout occurred. Now, when we go back in history, historically, you can see price also consolidated here. To make you sure and see that it is the same spot, look at it. Price consolidated at this level. Now I'm going to drag this one till the end. So let's keep going. So you're going to see that humans repeat history and the price levels also repeat itself. Can you see that? Same level where we had consolidation in the last time and a breakout occurred is the same level we are having a repetitive event almost simulating exactly like what had happened in 2020-2021. Now we can see that history is repeating itself here. I'm sorry, humans are repeating history here. Okay, now this with this chart that we can see and the move in the market, okay, we can from a great extent say that price is going up. For me, after looking at the historical price movement and our current price movement, I am deducing that the market is bullish. I'm deducing that the market is what? Is bullish. Alright? So because let's go down to the 4 hours time frame. Just look at the 4 hours time frame. A consolidation this wide, and finally a breakout happened between that consolidation. Look at where we are. So we are currently here in the history of Euro USD price. Now when you look closely how price bounced off this support zone, look how price bounced off these support zones. Look at how price bounced off these support zones. Like, this is a very great signal that the buy momentum is ever ready to make sure that the history that humans are repeating is heavily reflected in the market condition and in the market price. And that is what we are seeing. Okay? That is what we are seeing. Let me know if you are following. Let me know if you are following in the chat. Let me know if you are following in the chat. Let me know if you are following in the chat. Just type following. Just type following. Just type following. Okay? Just type following. Just type following. All right. So now what we're going to do here is to set a market order and position for a buy. So I'm going to click on a buy because I'm very optimistic from my outlook and analysis of what has happened, what is happening. What is happening now is that price is bouncing off this support zone. That is what is happening. Price bouncing off a support zone. Okay? And what will happen? What will happen is that price would push up. Is that price would push up okay, is that price would push up to the support zone, to the resistance zone. Okay, so now we are optimistic that from this level price would push up, okay, to this level. So we're going to place a buy. Good. A buy position has been placed. All right, off this buy position we are going to set a stop loss order. Should market reverse, we're going to set a stop loss order at this level at 1.1899922, and we're going to set a take profit level, okay, up here at 1.230. okay, let me see, yeah, 1.23088. And now that we've done that, we're going to click on confirm changes. Can you see that? Good. So now we are optimistic that price will keep going up, and the next target level for price is 1.23088. Now you could see that we set our take profit level meticulously, such that if price goes against me, I lose $18, and if price goes in my favor, I make $106, and I'm good for this trade. Okay, fantastic. If you have any question, please do well to drop it in the chat box. I can see Lucky, I can see Evelyn, Mustafa, Muhammad, Lucy, Hussein. If you have any question, please do well to ask, and I would answer any question relating to this conversation. We have looked at what has happened. Okay, we have looked at what has happened. We have looked at what is happening. Okay, and we've used both what has happened and what is happening to derive what will happen. Okay, to derive what will happen. Let me know if you have questions before I proceed. Someone say, where would you another pullback? I'm not sure I understand your question. Where would you, but after another pullback? Maybe you can rephrase the question. Going back to the daily time frame now, you can see how price bounced off this support zone. Okay, you can see how price bounced off this support zone. Very important. All right, very, very important. So now someone is asking, what lot size do you select? So the thing is this: I'm not here to tell you what lot size you should select, because that is based on your risk side, all right, and also on how much you are willing to lose if this trade goes against you. All right, so you don't want to take a lot size that will be harmful to your account if the market goes against you. So you need to put in your risk management in place. Okay, okay. Any question? Okay, you say, where would you buy after another pullback? So currently I can't say what would happen in the future, right, as to like what market would actually do. I can only give you my outlook based on what I see that the market has been doing, and say, okay, this is what market would most likely do in the future. what I see that the market would most likely do in the future is what is to touch this price. Because why? There has been a price footprint here historically. So price will definitely come here to touch this level. Now when price touch this level, then there can be a pullback. Alright? There can be a pullback after price has touched that level. I don't know if I'm clear. It looks like my take profit is far above my selling point here. Okay, I believe I'm clear, right? Awesome. Okay, wow, I like these questions that are coming in. Said, what do you say about unemployment claim USD data? What will be the direction of the market considering the news? So if the unemployment claim, if the actual unemployment claim is higher than the forecasted unemployment claim, okay, then investors would have a bearish outlook, right? Would have a bearish outlook, because that is only saying that what, there is no money in circulation. There is no money in circulation. However, if the unemployment rate is lower, okay, is lower, which means there are fewer unemployed people and there are more employed people who earn cash, okay, and eventually will spend the money, which means now the lower the unemployment claim, the higher the money supply, because those who are working get paid, and that is how, you know, money flows in the economy. Okay, that is how money flows in the economy. Okay, any question, any other question? I really love these questions. Okay, let's keep it coming, let's keep it coming, let's keep it coming. All right, so it's a simple macroeconomic what is it called, analysis. If the number of people claiming to be employed are more than the number of people claiming to be unemployed, it simply means that there are more people that will be earning a salary, a wages, or whatever it is that they will be earning, and there are more people who will be spending, buying stuff, going to party, okay, buying food items, buying games, and then money is circulating in the economy. So the lower the unemployment rate, the price of USD, if the unemployment rate of US, you know, reduces, it strengthens the dollar. And when it strengthens the dollar like that, okay, it will further change the direction. All right, it will change the direction. So there might be a short-lived market swing when, you know, the price of the unemployment claim comes out, and it happens that there are now fewer unemployment claims, so which means there are more people who are employed and there are less people who are unemployed. What happens? The dollar reacts immediately. If it is Euro USD, the dollar gains more strength and price will drop. You know, the euro value will drop, then the dollar will gain more strength. But that might just be short-lived for a while price would most likely go back in its direction or continue in the new direction. So if the unemployment claim comes out and mark heavily and market reverses and continues to go down, of course that can happen. In the financial market, there is no 100% outcome. All right, we have to make provisions for downside risk. So we have to you take risk management very seriously, because we don't control the market. You cannot control the market. Our emotions cannot control the market. The market is is a reality of human activity. Okay, the market is a reality of human activity, and like I said, history does not just repeat itself, humans repeat history. And as long as humans keep repeating history, reacting to price changes similar way, we would always have that experience in the market. So regardless of how certain you are about a market direction after analyzing the market, do not do not do not do away without putting risk management. As you can see, I have my stop loss and I have my take profit. You can explore every other opportunity here. Okay, you can explore every other opportunity here. If you see, we have trailing stop, we have break even. These are others that can actually help you edge the market, and win basically. All right, any other questions? Someone said I think SL will eat. Awesome. So if you think SL will eat, avoid the market. Okay, someone said 2 bearish candle after impulsive move. Do you still anticipate that impulsive will follow and make another leg? Yes, from what I can see here, there are 2 bounce from this support zone. I'm very optimistic that price will go up from here. All right, that is the outlook I have on Euro USD. Fantastic question today, guys. Fantastic question today. I think I really enjoyed today's session with you. For the questions that you are asking, awesome, shows that you are following and well interested in the FX market. Awesome. So while it is important to trade and the likes, we also need to understand risk management as a priority. So if you are a beginner just joining us for the first time or trying to find a balance, please listen to me in this regard. 1, you are encouraged to start with a demo account. Practice trading with a virtual money to understand the market and your trade and your strategy without risking real capital. Okay, use a stop loss order. Always set a stop loss to limit potential losses on every trade. 3, trade with a risk to reward ratio. It's very important. Now if you look at my stop loss and my take profit, you see that there is a risk to reward ratio of over 1:4, which means I'm willing to risk $18 to gain $100. Okay, now this means that when you aim for a minimum of 1:2 risk to reward ratio, it means you should aim to gain at least twice what you are risking. Okay, aim to gain at least twice of what you are risking. This is very, very important. 4, risk only a small percentage per trade. Risk only a small percentage per trade. So it's important that you limit your risk to 1 to 2% of your trading account. So don't trade with almost all the capital in your account. That is very risky. So you risk a small percentage per trade. 5, diversify your trades. Okay, diversify your trades. Avoid putting all your capital into a single trade or currency pair to spread your risk. It's important that you diversify your trade, so you don't want to do 0.5 lot size on a single trade or 0.05 lot size on a single trade when you can do 0.1 or 0.15 lot size on 2 or 3 trades. All right, avoid over leveraging. This is very important. You need to use leverage cautiously, because if you don't use leverage cautiously, it is going to amplify your risk. It's going to amplify your losses. If care is not taken, higher leverage can wipe off your account before your eyes. 7, you have to stick to your trading plan. It's important that you have a clear plan and avoid emotional trading. Don't deviate from your strategy. Focus on your strategy. That is very, very important. Focus on your strategy. 8, keep up with market news. Stay informed about economic events and news that can impact the forex market. It's important that as a trader you stay informed with market news. Like you can see, who asked that question. It was Muhammad. Okay, Muhammad is saying that, just asked us a question about unemployment rate. That shows that Muhammad is following the market news. So this is very, very important, and I would encourage everyone to follow the market news. Avoid over trading. Don't trade too frequently. Focus on high quality setups and be patient. Be patient. Okay? Be patient. Review and adjust your strategy regularly. So you always check your performance. How has your strategy performed in the past? You check it and confirm how your strategy currently performs. This will help you improve and win more. So it's interesting to let you know that the Octa trading app is live on the Google Play Store, and Octa offers a wide range of trading instruments with low spread, fast execution and zero commission. It also has various educational resources, 24/7 customer support, and a strong commitment to fund and data security. Now, here is a promo code that would help you double your deposit. For those who are just joining us, here is a promo code to double your deposit. Take advantage of this promo code in 5 steps. 1, open the Octa trading app or visit our official website. Go to your profile, find the promo code section in the menu, enter the promo code and press activate. Make a deposit and enjoy your bonus. Some of you might be asking, what is the promo code? The promo code is the code on my right hand side that says Tunmise 100, TUNMISE 100. Now this is the promo code. When you deposit $100, it gives you $200. When you deposit $1,000, you get $2,000. That is what this promo code is all about. You don't want to sleep on this, guys. Jump on this now, and I look forward to seeing you in our next session. A quick one. We've just discussed price action, its component and its suitability for traders and its applicable scenarios. All right, and this was done in our live session. Now, interestingly, here is a quick takeaway for you. Go ahead to analyze your trading instrument to understand how they behave under various market conditions. Review your action and reflect on your decision to identify what worked well, and what can be improved. Keep up with the latest market news and updates. Use our educational resources on our YouTube channel and also on our website to enhance your understanding of trading strategies and tools. Thank you very much for joining, and we value your feedback. So please take a moment to fill this survey. Your feedback is essential for us to improve our future webinar. This survey is going to take just 1 minute. Scan this QR code and give us your valuable feedback. We look forward to getting your feedback and responding and improving our future webinars. Thank you for joining us. Don't forget to tap on the subscribe button and smash that notification bell to be the first to be notified whenever we have our future webinars. We are committed to helping you on your journey to becoming a successful trader. Thank you for joining us, and I look forward to seeing